I'm Paddy Nicol, President and CEO of Orogen Royalties, and I'm here today to talk to you about what it means to be an organic royalty generator. It's a bit of a differentiation in the royalty space. I'm going to talk about a couple of our key assets, most notably the Ermitaño deposit, which is now in production in Mexico, and our Silicon Gold project, which is being operated now by AngloGold Ashanti in the Walker Lane trend in Nevada. Finally, we'll talk about some of the prospect generation business because that's an important part of our differentiation strategy, and then a couple of catalysts that will be coming up over the next year and years beyond. So that is our forward-looking information. So when a lot of people, they come to me and ask about Orogen, they always ask about what it is to be or to have an organic royalty generator model. And the model that we employ within Orogen is basically, it's steeped in the roots of prospect generation. And prior to the creation of Orogen, two companies by the name of Evrim Resources, Renaissance Gold, were prospect generators working in the Western Quarter of North America. And through our efforts as prospect generators of working on early stage targets, putting them in partners' hands, two significant discoveries were made, as I mentioned, Ermitaño and the Silicon project. And through over the years, we've also developed a number of high quality gold royalty assets in what I would argue is some of the best mining jurisdictions on earth, being Nevada for its gold, Golden Triangle for copper gold, and also in the Laramide Belt, Northwest Mexico for base metal and precious metals. As of the end of 2021, we are now revenue generating. We expect to receive our first check here in Q1 of this year. And because of the royalty model or the organic royalty generation model that we employ, we are debt free. We don't have to go out and buy our royalties like some other companies do. Our royalty portfolio is a developing portfolio. It had approximately $85 million spent by partners in 2021. And that's obviously, it points to a developing and growing royalty asset base. And it's something that we expect to see to continue on in 2022. Speaking to the prospect generator side of the business, the joint venture side, we have 12 active option agreements or joint ventures today, along with one alliance. So when we talk about royalty creation, we employ a two-pronged growth strategy within Orogen. Obviously, the first one I've talked about is through prospect generation. That is working up the early stage target, putting it in the partner's hands. And by the fact that Ermitaño and Silicon have been discovered, and in the case of Ermitaño has gone into production, it proves the concept that the prospect generator model, royalty generator model works in this case. Along with that, we have as many joint ventures as we possibly can. That gives rise to additional exploration discoveries in the future and obviously more royalty creation to us. We have active exploration teams. We are boots on the ground in all the jurisdictions that we operate today. The other side of what we do is through selective royalty acquisition, and this is really to augment our royalty portfolio with sort of one-off or single royalty purchases. I don't think you'll see Orogen going out and competing for baskets of royalties. Our cost of capital is simply too high to compete in that sector, but we will leverage our geological and financial expertise to evaluate opportunities. And really this comes down to a function of deploying our capital in a very disciplined manner, not a lot different from what we do as a prospect generator, and focus on strong risk-adjusted returns. So jumping into our key assets, Ermitaño, as I mentioned, it's in Sonora, Mexico. Orogen now holds a 2% net smelter return royalty. First Majestic is the operator. They are very capable, very responsible operator. So that's, I think, a key thing in being in the royalty business is having strong partners own your projects where you have royalties. Initial production started on this in November. So the first doré gold bars were poured. And so initial production has taken place. They are now ramping up towards full commercial production over 2022. The PFS that was released by First Majestic late last year indicates a mine life of 7 years. It's important to note, though, that only 35% of the resource has been allocated to proven and probable reserves, and that's what the PFS is based upon. And so the additional resources over time, as they are converted, will obviously extend the mine life beyond that 7 years and provide a greater amount of cash flow. For the first 7 years, we expect to see 12.25 million US in revenue coming our way. Other important point is that this royalty is not specific to a single deposit. It's situated within 120 square kilometer AOI. So we see additional opportunity for expansion of reserves and new deposits that could be discovered. Over the medium term, we have the Silicon Gold project. We're moving up into Nevada now. This is, again, within the Walker Lane trend. This project is owned by AngloGold Ashanti now, and again, a very capable, responsible operator. We have a 1% net smelter return royalty. The interesting thing about Silicon is that since the discoveries that were made back in 2017, there's been no drill hole information announced by AngloGold on the project. And as of the last fall, we've had about 70,000 meters completed of drilling. And in addition to that, AngloGold has gone out and purchased a lot of the lands that surround the Silicon project. They acquired Corvus Gold for $450 million. That transaction, I believe, was completed at the end of last year. In AngloGold's public disclosure, they've talked about a resource now that's going to come in 2022. They've also talked about Silicon and the surrounding area as a potential tier 1 asset, which in the books of most major mining companies is about 500,000 ounces a year for the minimum 10-year mine life. Focusing on the Ermitaño deposit, diving a little deeper now, I'll draw your attention to the table up on the upper left side of the screen. That is the resources that have been calculated based on the pre-feasibility study by First Majestic. The two rows at the bottom of that table give you an idea of the global size. It's about 8 million tons of ore. Of that amount, 2.8 million tons has been converted to P&P. And so as I mentioned, there's only 35% of the deposit has been converted for mining. In the PFS, there's a recommendation for an annual 5,000 meters of infill drilling that will convert resources over into reserves, and also 15,000 meters of near mine expansion drilling to expand the known zone of mineralization. The deposit remains open to the east, and we see that as excellent opportunity to add additional resources to what's currently there. And I'll draw your attention to the graphic on the right side of the screen. That gives you an idea of the claim situation. The Santa Elena mine is the actual location of the mill. The Ermitaño deposit and the TAN claims there is what feeds the mill. This is situated in the Rio Sonora Valley. And within this valley, you've got the Mercedes mine, you've got Las Chispas, which Bruce mentioned in his presentation, and you've got the Santa Elena mine, you've got now the Ermitaño West deposit. And within this, there's a lot of activity. This area was historically explored for copper. Now it's being explored for gold. Orogen is well situated with not only with the Ermitaño 2% NSR, but with the Kumobabi 1.5% NSR to the south. This is our initial cash flow analysis. Again, this comes out of the PFS from First Majestic. I'll draw your attention to the table at the bottom of the page. It gives you the idea of the $12.25 million that we'll earn over the next 7 years. Obviously, the production just started in 2021, but 2022 and onwards, we see a ramp up of revenue, peaking at 2023 to $3.5 million US. You'll see around 2025, our revenue starts to drop off, and that is where we see the conversion of resources within the global, the M&I and inferred resources being converted to proven and probable. And that's also supported by the table above, where you see the ore production in the first row, total ore, where you see it start to drop off in 2025. We expect to see that that tonnage being augmented by conversion of resources, thus extending the mine life considerably beyond 2027. Somewhere we expect this mine to be in sort of a 10 to 12 year mine life. So lots more revenue to come off this deposit in the future. Moving into Nevada now, if you look at the tan colored claims within that graphic there, those claims are owned by AngloGold Ashanti, and the red box in the middle is our area of influence where our 1% net smelter return royalty sits. That comprises about 58 square kilometers. Within there, you can see there's a central Silicon and Merlin zone. The lands around that red box were once largely held by Corvus, and that's what AngloGold Ashanti acquired late last year. Again, in public disclosure, AngloGold describes as silicon as having significant oxide ore bodies to depth. They've talked again about initial resource coming in 2022 with a conceptual mine plan to start this district up in 2024, 2025, that considers the North Bullfrog deposit being developed first, followed by Silicon and Merlin. So we're very excited by the development of activities in the camp. We expect to see a high degree of news flow coming off this project in this year and in years to come. And our feeling is it's only going to add value as time goes on. I will draw your attention to all of our royalties that we currently have on this graphic. We have 4 royalties down in Argentina, but we also have 5 in Mexico now. And as time goes on, we continue to add to that through organic royalty generation. We have a couple in Nevada as well, the Silicon, obviously, in the South Roberts. And in British Columbia, we sold a project called Axe last year to a group called Kodiak Copper. I'm sure some of the listeners out there might be familiar with Kodiak and their MPD project. The Gate Zone in particular has been generating a lot of activity, a lot of good news over the past couple of years. The Axe project sits on the same structural trend, has a similar geophysical and geochemical signatures is what you see at the MPD project. And we're excited by the fact that there'll be work and hopefully drilling done on that project this year. And so we're very excited. So when we sold the project, we sold it for 2% NSR plus 1 million shares of Kodiak Copper, which we still hold today. We'll get to the Ball Creek component there in a minute. This table here gives you an idea of all of our active joint ventures. And as you can see, it's a bit of a busy slide, but there's a lot of probably familiar companies, a lot of juniors in there. There's one major gold producer in Yamana Gold. We've got an alliance with them and 2 joint ventures on 2 of our projects. But I think the important point to make on this slide is if you look at the far right column under the term, you can see that all of the deals that we do are geared for royalty creation. The historical experience we had as prospect generators was to have deals that were structured around milestones, PFSs, or feasibility studies or deposits. We are not worried so much about that anymore. We give the partner what they want, which is 100%. We get cash, we get exploration work, and the most important thing is we get a royalty. So every deal we do now has a royalty, and we do them on terms of 5 years or less. So there's an accelerated component to our deal structures. So Ball Creek, this is a project that's located in the Golden Triangle of Northwest British Columbia. And I'm sure a lot of you are familiar with the Golden Triangle. Ball Creek is a 520 square kilometer project, so very large. It sits right in the heart of it, and all around it, you can see the projects that I'm sure a lot of people are familiar with, and a lot of M&A activity that's taken place. Newmont has been busy in there. They acquired Tatoga last year. They've got a joint venture with Teck on Galore Creek. Newcrest acquired Red Chris a number of years ago for $804 million, and most recently acquired Pretium for $2.8 billion. That was announced a couple months back. Royal Gold, as a royalty company, is also active in this area. They purchased a 1% NSR on Red Chris for $165 million last summer. So lots of M&A activity. This project's been under joint venture for a couple of years with different partners, but could never get the exploration focus, could never get the budget it really needed. And so instead of joint venturing it a third time, we've decided to put it into its own company. So Orogen shareholders will receive a dividend of stock in Newco. Orogen will retain a position within the Newco as well. We'll also retain a small royalty. We've just hired the CEO for the company, and so we'll be announcing that shortly. That will kickstart things. Hopefully we'll have this up and going sometime midway through 2022. So stay tuned for that. Final slide, our share structure. We have 178 million shares outstanding, share price of 45 cents, so market cap of about $80 million. We have just on $9 million in the bank today, so we're well financed. Our share ownership is such that major shareholders include Altius Minerals, who are themselves a royalty company. They hold about 15% of the company. Adrian Day Asset Management, through his own direct holdings, and Holdings of Sprott holds about 18% of the company. We have a number of large shareholders who hold sort of 5 to 6% pieces too, but largely a retail held story. And as we transition out of the prospect generator space that we were in, I expect that we'll see more institutional ownership as time goes on.